Good afternoon and welcome to this next episode of Governance Headlines, a program that is a sister program to Governance Dialogues, which I had the pleasure to launch a few weeks ago. And today I would like to focus on ESG related topics, which has been something that's been receiving increasing attention in the financial press, and in particular as it concerns one type of investor, that is the sovereign investors or sovereign wealth funds. And of course, those of you who follow the financial press closely, you would know that ESG investment strategies have been receiving enormous attention over the course of this year, with the anticipated or estimated half of all institutional investment flows going to ESG compliant or oriented investments over the course of this year. And as Larry Fink, the CEO of BlackRock, estimated that mutual funds and ETFs have poured approximately $288 billion globally in sustainable assets, which represents a 96% increase over 2019. So quite a lot to say on that topic of sustainable investment. Yet what we really mean by ESG compliant assets remains to be relatively unclear, in large part because we do not have a clear methodological framework for companies to report on their environmental, social, and governance performance. And in particular, in this today's episode, I will focus on the E part, so environmental performance. And on that side, some progress has been made with the consultative framework being released by the IFRS Foundation, which culminates along efforts by the Climate Disclosure Standards Board, the Global Reporting Initiative, the Sustainability Accounting Boards, and the International Integrated Reporting Councils. All a mouthful, but these NGOs have been working over the last few months on creating this framework of integrated reporting, including with respect to environmental disclosure. And this is in fact a topic that I've discussed at length in what I think was a fascinating interview with Robert Eccles, who is a foremost expert on this topic, and that was, I believe, in Governance Dialogue 19, which is also made available on our channel, and you're welcome to view it if you have further interest in this topic. And of course, we also know that other investor federations, such as the International Corporate Governance Network, for instance, which is perhaps the most globally recognized investor body worldwide, had amended their corporate governance principles, including issues dealing with sustainability, and notably asking companies to assess the impact of climate change on company business models, setting up and disclosing targets to reduce emissions, as well as aligning CEO and executive pay to sustainability targets. So quite a lot is being done in this space as we speak. And yet what drew my attention to this topic over the last week was an article that appeared in the Financial Times that talked about ESG performance specifically by sovereign investors, and they have zoomed in specifically on sovereign wealth funds, which today are estimated to control close to $9 trillion USD of assets. And the reason that the FT had looked at environmental footprint of sovereign wealth funds is that the group of institutional sovereign investors that surveys these funds, which is called the International Forum for Sovereign Wealth Funds, found that only 10% of SWFs have actually invested in climate-related strategies, according to this organization. And I thought what would be interesting in today's conversation would be to focus on sovereign wealth funds and state-owned companies, and talk a little bit with you today around their environmental footprint and the disclosure of that footprint. Because a lot of ink has been spilled on the performance of institutional investors, mutual funds, pension funds, insurance companies on these factors, but not a lot has been spilled on the footprint or impact of sovereign investors in this particular area, which is indeed a little bit complicated. Of course, the conclusion that the International Forum for Sovereign Investors came to is an interesting one, but also I think one that underscores the enormous diversity of these funds worldwide. When we look at the Public Investment Fund in Saudi Arabia, Norges in Norway, the China Investment Corporation in China, the Abu Dhabi Investment Authority and Kuwait Investment Authority, their strategies are quite different, including with respect to ESG. And there it's interesting to highlight, I think, that Norges, for example, had a number of years ago divested from their coal investments, which was at the time a controversial decision, and then one which has been questioned quite a bit internally, and also prior and post in terms of its impact on the bottom line. And yet what's interesting also is that a number of sovereign funds that we're looking at, represent some of the fastest growing sovereign funds worldwide, such as the Public Investment Fund, ADQ, and others, are actually growing on the back of investments into European and other emerging market companies on the back of cheap valuations over the course of last year, but also as a result of their own establishment of sovereign state-owned companies that operate nationally. And some of them do have environmental targets as their primary and bottom line objective. And I've had the pleasure, for example, to work with the Saudi recycling company, which was established under the Public Investment Fund with that specific objective. So interesting sort of different directions that sovereign wealth funds are taking. And one of them was, of course, and this is an area where significant capital has been poured, is the establishment of environmentally or ESG kind of oriented cities. The first experiment of which was, of course, by Mubadala, and subsequently we've heard of the establishment of NEOM in Saudi Arabia that follows some of the ideas that were previously tested in the Abu Dhabi scenario with Masdar. So I think that to come back to the FT piece, is that sovereign investors do have a fundamentally different imprint on environmental factors, and not much is still known about it. It's an area that I think requires much more research and much more probing. But also in doing so, we need to keep in mind where these different sovereign investors come from in terms of their own geographies, whether it's from jurisdictions where you have state-owned, national state-owned companies that dictate a completely different approach. And that also, I think, beg a valid question as to the environmental performance or the ESG performance more generally of these national oil companies, which ultimately, when they end up being under the ownership of the sovereign funds, impact very much on their ESG footprint. So those are some brief thoughts that I would like to share with you today on ESG and sovereign wealth funds. And this is a topic we'll be discussing further in future episodes of Governance Dialogues and also in Governance Headlines. Thank you for tuning in.